Well, hello there, everyone, and welcome back. It was an incredible summit week last week. I hope folks had an amazing time at the summit and got a ton of golden nuggets. Welcome to all of the new wealth charters that have joined us. Looking forward to being on this journey with you, and we're getting started real quickly with you. We are doing an accelerator class tomorrow where I'm going to share insights and strategies directly on the strategies that Rob has developed over the course of decades. The Champion Trend Pack Toolkit is something that you heard a lot about, and I'm going to be teaching you a whole bunch about that tomorrow. Now, when you look at what's on screen right now, you've got a daily chart of the S&P E-minis. That's the S&P 500 futures contract, the mini contract. And what you can see here is a opaque green zone. That's Champion Cross. Champion Trend is a trailing line that originates with an original buy zone signal that literally makes it very easy for a trader to identify, and continues to guard price action on a move up or move down. We are still in that buy zone. However, we've obviously seen that spill from last week. That spill from last week created that negative momentum, that contraction that's trying to be unwound now. And we do have a counter trend bounce to that selling in place. It was there this morning. It has continued as we've moved in towards the end of the day. And our thought process at the start of the day was we're likely going to see something in and around the 5620-ish area. And of course, that would be an area where perhaps price stops moving up or intersects with the earnings that are coming out this week, like Tesla, for example, tomorrow after the bell. Now, do I think that we're going to see the earners create a breakout and a full repair and we resume? It's possible, but I don't want to guess at it. I want to use the tools and follow the rules. Right now, I still have resistance on top of price action, the slow speed line, the Champion Cross buy zone, top of the zone, and I've got rising support underneath price. The MSR channel, of course, you can see that price is in a zone where things can get a little whippy. We need to either break out, which would open the door for a rise potentially back up to highs or new all-time highs, or we need to break down, and that would include seeing a couple of days of price action below the MSR channel, and that's all the way down here in the 5490-ish area. Now, what do the tools suggest about the next likely outcome? Well, we're in this kill zone, if you will, and we've got the NASDAQ in control of price action. The NASDAQ is telling us a few very simple and clear things. It's not ready yet to move as much as the S&P 500. It's had a bigger move than the S&P on the day. Yes, it's up about 1.6%, 1.5% when you look at the Qs. And the SPY as of right now is up about 1%. Now, we're looking at the futures chart, but what I'm trying to intimate to you is the Qs are saying that they're doing better on the day, but are they actually in a stronger position to continue? They are moving into the same sort of very nasty falling resistance and rising support underneath price. And I'm going to take you to a different type of chart to kind of take a look at that action. And then we're going to come back here and identify likely outcomes. So if we get a little tighter into the action on the Qs and get a sense of rising price into falling resistance, and the reason I brought this up is it includes a channel that is broken and a channel that goes back to the bottom of the market back in October of 2022. And the reason this is important is we've come down to the mean of the channel, so we mean reverted, and what we're expecting is a dead cat bounce followed by a continuation down towards the bottom of the channel. Now, that's what I would expect based on pattern. That does not necessarily have to happen all this week or in one day, but that's standard fare. You come up all the way to the top of the channel, you're likely going to see it traverse back towards the very bottom of the channel. Now, this could still maintain an uptrend. However, it would be a fairly nasty spill. Net, the S&P is my key swing barometer. It's the one that gives me all of the key idea of what I want to do with day trading or swing trading. And for now, I want to be very cautious about prices rising and taking on swing trades. I'd much rather be day trading and looking for that falling resistance on price to either be broken above, and we see the Qs run, intimating to us that we're likely going to make new all-time highs, or, and the more likely, would be come back down and break those rising support structures underneath price. Have a wonderful rest of your day, and thank you for watching.